YouTube right now. What's happening? I'm live on YouTube right now. I just hit the button. Everybody jump over on YouTube. I just hit the button. What's up? Green papaya. Wait, I'll be messing people's names up, man. Yeah, y'all jump on YouTube, man. I'm about to get who over there. First person get over there, put a one in the chat, and then I'm gone. Somebody put a one in the chat. As soon as you get over here, then I'm gone. Let me pull up my slides while I'm waiting for somebody. Yo, I see Carrie in there. Carrie in the building. Miles in the building. All right, y'all jump over on YouTube. I'm gone. Uh-oh. Yeah. What's happening, everybody? What's happening? What's happening? I'm 4 minutes late. I jalapies for my tardiness. I jalapies for my tardiness. I see my sweetie in the building. I see my sweetie put a one in there. You know what I'm saying? Am I looking handsome, baby? What's up, everybody? Such Nisha. Baby, am I looking handsome? Am I looking handsome? Fresh death like $1,000,000. I was laying up there texting people, man. I was texting people and I said, oh man, it's 3 o'clock. Let me get up. I'm getting my slides together real quick. So uh for everybody popping in, y'all all the cousins know what the lick read. Y'all already know what we doing. For anybody on the replay, what it do? What it do, Devin? For anybody on the replay or anybody who knew this your first time hanging out with us, all I do is I get on YouTube, you know what I'm saying? Uh I get on YouTube and share what I know when it comes to the stock market, share what I know when it comes to investing with the hopes that it will help somebody. With the hopes that it'll help somebody. So hopefully y'all can relate. What's this right here? What in the world is that? Did that pop up from my tablet? What is that? I got something weird on my screen. No, that's on. Oh, that's on. What's the name? Why is this so big? Home. There you go. Okay. All right. I was tripping for a minute. Okay, man. And of course, it goes to that screen over there when I want it on this screen right here. When I want it on this screen right here, let me swap screens. It does this to me all the time. Swap screens. Okay, screen is swapped. All right, y'all. Let's get into it, man. Let's get into it. Y'all, let the cousins know that we on YouTube, man. Let the cousins know we on YouTube. Let the cousins know. Hey, what's up, mama? My mama in here. I see you got your haircut. Here go Lex. Here go Lex. All right, man. Y'all, let's get into it, man. Where we at? That's Discord, desktop. Boom. Whack 'em. Boom. That's the one I want. That's the one I want home. Okay, so what we doing? I'm breaking down my same old thing I always break down, but this time I'm relating it to trading options, and we're gonna go through as if we used it to day trade a spy position. I got it everything. I'm trying to get my turn this focus off so it won't be hunting around. You feel me? Let me get me in focus. Hold on. There I go. Right now, I'm in focus right now. Okay. All right. So we're gonna break it down as if we're doing a spot trade because a few people been hitting me up saying hey, if y'all can hear me good, let me know if y'all put a one in the chat if y'all can hear me good cause the other day somebody told me to stop screaming. So I want to make sure my volume good. Y'all let me put a one in the chat if my volume good. All right. Put a one in the chat if my volume good. Okay. All right, my volume good. All right, here we go. We about to get into it, man. Y'all like my spider game. I be putting some thought to my spider game. Y'all ain't even know. Y'all ain't even peep how Spider Man. This time he crawling over the spider gang. Look at that. You see this hand and the arm. He crawling over. Initially, he just had started. His legs started climbing through the Timbs, right? And he was behind the tidbit. But this time, I got him crawling over the spider gang. Y'all ain't even peeped that. Y'all ain't peeped that until I just said it, man. You feel me? Let me blow it up so you can see it. Let me blow it up so you can see it good, man. Y'all ain't a peep. Look it up. Y'all ain't a peep. Spider-Man was climbing over the spider gang until I just said that, man. Y'all appreciate my hard work, man. I be putting work into that, man. Y'all let's go, man. Y'all know what time it is, man. I am not a financial advisor. Oh, it's big on the YouTube. I ain't really got to even blow it up. I'm blow it up anyway, just in case, so y'all can see it. I'm not a financial advisor. Say it with me. I am not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. That's why we do the Tim's Tidbit, so you can, you know what I'm saying, do your own research. Investing involves considerable risk. Yes, it does. It truly does, especially short-term trading. That's what we talk about today, short-term trading. And you should always consult a financial advisor before making any investments decisions. You feel me? All right, then let's get into it. Are we gonna go through it? We still got to go through it, even though y'all already know who my family is. This for the people that jump on the replay and they may not know my family. Look here, man. My little sister Kiki Williams up first to bat, man. Stocks to Freedom, baby. If you want to be a part of a great group, she's an amazing mentor. Got P Dub and Stocks to Freedom. You got Stock Baby and Stocks to Freedom. You got Lex and Stocks to Freedom. Boy, the Stocks Freedom. All these great people in Stocks to Freedom, man. The Come Up series. Shout out Mark and Jolene. Everybody know Mark and Jolene, but I want to put y'all on to some other cousins that doing some great things too. TiVo and AJ. You know what I'm saying? The Investor Plug on IG. TiVo. What's TiVo these days? Is TiVo Tivanachi? Is he Long Live Alexis? What is he? TiVo be changing the name, but TiVo, you know what I'm saying? TiVo and AJ be doing supplemental Sundays on Sunday night at 8 or 8:30. I can't remember. It's on YouTube. On the Come Up series YouTube page. Then Mark and Jolene go live on Tuesday and Thursday at 8:30. World famous Blind Bullets. If you want to learn how to trade futures, shout out my little brother Jason Sweet. He's an amazing future trader. He can get you there. Big Draco. Finance on fleek. Shout out. Oh no, I done jumped all over. That's first gen. Man, I jumped way down now. Zay, y'all got to tighten me up. The runners, man. Shout out Zay, man. If you want to be a part of a great community, if you want to learn how to trade technicals, if you want to, you know, all that. Shout out Jay, man. Be a part of the runners, man. Stock Zay on Instagram. Learn with Lex. She got a whole Wealth Walk clothing line that she ain't putting nobody on to yet. She be flexing it in our face. But shout out to little cousin Lex. She extremely rude and disrespectful to us old people, but you gotta love her. I love her to death. Shout out Lex. Learn with Lex on Instagram. What it is on Twitter, Lex? What you is on Twitter? Lex Amelia, I think. Follow Lex, man. Big Draco, there she go. Finance on fleek. Prolific prophecy official, $1 million money makers. Her and Briscoe doing all kind of stuff. I don't know Briscoe page. Briscoe and Draco and they got all that stuff going on, man, with futures and financial money planning and budgeting, all that. Charles Corner, everybody call him Uncle Charles. Wall Street Consortium on Instagram. Book a one-on-one with him. He'll get your financial planning in order for your investing in the financial future. Trading with a Dummy, the homie Mark. He got an amazing YouTube page where he just break it down, keep it real. He keep it real just like me. He's sharing his investing journey. He share a whole lot of educational stuff through, you know what I'm saying, fun and informative videos on YouTube. Shout out to cousin Amit, Tag. Everybody call him Tag. He got official brand resumes, but they got this new thing. This new business they launching, and it's dealing with all us tied together. Official brand. It's called Right C. You know what I'm saying? Right C on the Right C on Instagram. The Right C. Y'all check him out. And then the professor. This is a dude I oopsed up on. He day trade. He day trade shares, and he got a different trading style from me. He do support and resistance, trend lines, EMAs. But he trades. He don't even trade options. He don't know nothing about options. He day trade shares. You know what I'm saying? Look, he got all this free information teaching how to be a day trader. Check him out. The Day Trade Professional on Instagram. He got a lot of fake pages too. If it ain't the one I'm following, that ain't him. All right, let's get into it, man. Y'all know how I do. I try to break it down for somebody who like a very, very beginner. You know what I'm saying? And don't know nothing. And then just move on into what I do. Because everybody, you know what I'm saying? Everybody ain't at the same place. Everybody ain't at the same place. Everybody ain't, at the same spot in their investing journey. And I don't know everything, but I just try to share what I do know. So what I do for making everybody know I trade the SPY. The SPY is an ETF that tracks the performance of the S&P 500, right? The SP 500 or SPX, whatever, however you want to call it, right? And then the ES are the futures of the S&P 500. What are futures, Tim? Futures are like contracts that you trade, just like if you trade option contracts. Futures are contracts that you trade where you think the future price of the S&P 500 is going to be this amount. And the futures, they rotate every 3 months. They got a March expiration. They got a June expiration, a September expiration, a December expiration. They expire every 3 months. And they rotate like that every year. And that's the futures. That's the ES, right? Why do I watch the ES if I'm trading options on the SPY? Because the ES and the SPY and the SPX are all the exact same thing, except you got futures, you got the actual SPX itself, it's the cash account, you know what I'm saying? And then you got the SPY, the SPY, which is the ETF that tracks the S&P 500. They're all the same thing. They all move tick for tick, right? So what's the ES? The ES is an E-mini of the S&P 500. It's an electronically traded futures contract, and it's a fraction of the value of a standard futures contract, right? The ticker symbol is ES. That's why everybody call it the ES. That's the ticker symbol. Just like the ticker symbol is the SPX and the ticker symbol is the SPY, the SPY. So the ticker symbol for the futures is ES. The ticker symbol for the cash account is SPX, and the ticker symbol for the ETF is the SPY. Right, the ES, they started trading in 1997, right, and they roughly 1/5 the size of a full SP 500 contract. So meaning for every tick that the ES move is $12.50. So for every point, that's that's $50. Yeah, 12, yeah, $50 because it's 4 ticks in every point. So it's $50 per point or $12.50 per tick. The ES trades 23 hours a day, Monday through Friday, and it trades Sunday from like 6 p.m. It start trading it, so it's closed from 6 p.m. Friday night until 6 p.m. Sunday night, and then it's open, you know what I'm saying, from 6 p.m. to 5 p.m. every day. So 6 p.m. Sunday night to 5 p.m. Monday. It shut down for an hour, 6 p.m. Monday night to 5 p.m. Tuesday. Shut down an hour, 6 p.m. Tuesday to 5 p.m. 6 p.m. Tuesday night to 5 p.m. Y'all get what I'm saying, right? And it's a halt on the ES from 4:15 to 4:30, right? And this is the reason why I watch the ES to make all my charting and plotting and entry. Yeah, the trap always open, Lex. I use this to make my assessments in my entry, plot my entries for the SPY because it's open 23 hours. And I get into that in a minute. Because, yeah, the SPY got pre-market and post-market, but you can only trade options from 9:30 until 4:15. 9:30 in the morning Eastern Standard Time to 4:15 Eastern Standard Time. That's the only time you can trade options, and it's at the SPY is actually open. Let me show you, while I'm talking about that, I'm gonna show y'all some differences between the SPY and the SPX, right? The I'll get into the timing in a minute, right? The SPX, that's the cash account, like I said. It's the S&P 500. All of them tracks the S&P 500. S&P 500 like 500 publicly shared U.S. Companies, and it's market cap weighted, meaning like you get the market cap for a company by taking their outstanding shares and multiplying that by the share cost, and that'll give you their market cap. So, you know what I'm saying, for easy math, if you got a $10 stock, it's a $10 per share, and it's 1,000 outstanding shares. The market cap of that company is $10,000. It ain't no publicly traded company that small, but I'm just doing easy math. That's how you find the market cap for a company. The SPY, like I said before, is the exchange traded fund, or ETF, that tracks the performance of the S&P 500. And you can trade options contracts on the SPX, which is the cash account, and you can trade options contracts on the SPY, which is the ETF. But you can only trade futures contracts. Well, I ain't gonna say only, but you trade futures contracts on the ES, and that's, you got futures, then you got options. We talk about options today, right? And so here goes some differences. The SPY pay dividends, the SPX don't. The SPY is American, the SPX is European. The most important part of that I always remember about that is that the SPX is it can only be exercised on expiration days, whereas with the American style, it can be exercised at any time you got that contract open. You don't have to wait to the expiration to exercise the SPY, because they exercise in shares, meaning you can go ahead and say, I want to exercise my option and buy the shares then. But the SPX contracts, they only exercise on expirations, like on expiration Friday, and then one, it's settled in cash because it's a cash account. They don't have shares, like I said, and they, for the third expiration Friday, I don't know why, like on OPEX week, the third expiration of the month, the OPEX week everybody be talking about, for some reason they stop trading on that Thursday for the SPX. You can't trade, like the contracts that expire on the third Friday, you can't trade them on the third Friday. They close on the Thursday before the third Friday, but the rest of them, they close on expiration day. I don't know why. I don't know. I never cared enough to dig into it. Those are just some differences between it. And now, like I was saying before, the reason why I watch the ES is because this right here, this time. You see down there where the time says it's open, excuse me, from 6 p.m. at Sunday night until, 5 p.m. Friday. And so during the London, in the Asian session overnight. So the Asians start at 7 o'clock at night. You know what I'm saying? And it was 6 or 7 o'clock at night, Eastern Standard Time. And then the London starts somewhere around 3 o'clock in the morning, Eastern Standard Time. So from 6, 7 o'clock at night up until 7 o'clock in the morning, the SPY is closed. So you don't see no price action, right? Let me get over here to my chart. Right? You see, this is a chart of the ES, right? I look at the ES. So let's just say this right here, what time does that say right there? That says 6:58 in the morning. So 6:58 in the morning, this is usually the time I come peek at the chart for the first time, because I done got my boys up. I'm getting ready to take them to school. So I come peek at the chart for the first time, right? So just say over here along this side right here, this is roughly almost 7 o'clock. This last candle about to close is almost 7 o'clock, right? So from here over, let's just say 7, 6, 5, 4, 3, 2, 1, 12, 11, 10, 8, 9, 7, then 6, then it's 5 o'clock. So right here. So from here, from this green candle here with this long wick all the way over to this candle here, you wouldn't have none of these candles on the SPY or the SPX because they're closed during this time. Well, you'll probably have with the SPY, you'll probably have this one here. But with the SPX close at 4:15 and it don't open up until 9:30. You see what I'm saying? So in the morning. So you won't have from this big green candle here all the way over, you won't have none of that on the SPX chart, right? And on the ES, you only gonna have the pre-market and the post-market. So you'll be from like just this green candle right here all the way over to this red candle. you won't have any of those candles. So you won't see any of that price action. That's the main reason why I look at the SPX and then just make my SPY or SPX entries based off what I'm seeing on the SPX. Because if you only watching the ES, right, you're gonna you're gonna see the chart, you're gonna see the candles reacting to something, and you're trying to figure out why is it reacting to this level right here. It's because it's reacting to a level, to something that happened in the Asian or the London session where it didn't. But on the ES in the on the SPX and the SPY, it's just a big gap. It may be a gap, it may not be a gap, but for some reason it's reacting to something in the area, and you like, why is it reacting there? Because it's reacting to something that happened in the Asian and the London, but you just can't see that on the spot. That's why I watch the ES, so I don't have no surprises, or I can make more educated decisions on like how I'm gonna react with the SPY, right? So I said all that to say why I watch the ES as opposed to watching the SPY itself or the SPX itself on the chart wise. Now, while I'm watching the ES chart, I'm watching the options chain on the SPY or the SPX, whichever one I'm trying to trade for a day trade. Or if I'm looking to get into a swing trade, I'm watching the options chain on the SPY or the SPX at the same time, and I'll show you that through the slides, right? So I start with the daily chart. When I come in about 6:45, 7 o'clock, I start with the daily chart, and I'm looking for major liquidity pools and what happened the prior day and overnight. So right, I'm just peeking at this, and I'm gonna show y'all on the next slide my mental notes that I be making. I put some graphics on the screen for my mental notes. So I'm looking for major liquidity. What happened, right? I'm talking a story in my mind. I'm like, okay, we came up at the the beginning of January. We ran up, made all-time highs, dipped into some liquidity, and we eventually sold it all the way back down and made a good distribution of that liquidity way down here with some lows that was way back in like June. I think I squeezed in a little bit on the next slide, right? So we made a good distribution of that liquidity, right? And then we wicked up off it real hard. We pitter-patted, consolidated a little bit. Then we took off for a nice little bounce right here, and we came right back up to the bottom of these wicks right here, and then we just kind of consolidated. We bounced up. This was a good little bounce. I think it was like 5 or 6% bounce, but then we just consolidated in this whole little area right here, right? And then I'm also, okay, so that's over the a couple weeks time frame. And then the prior day we sold off really hard and aggressive right here. This candle right here, that's a really hard aggressive sell-off, right? And then overnight I could see that we sold off very aggressive, and then the buyers was coming back. So I'm like, okay, are they coming back because they coming back, or are they coming back up to sell down, right? So just looking at this, I'm bearish. I got a bearish mind. This is my mental notes. So I got a bearish mind set because we the way we sold off so aggressively on this candle right here, and plus we still in the midst of a downtrend where we trying to recover, but the market still is like it made a low. It made like it came up, it made a lower high, a higher low here, right? It made a higher low here, it made a higher low here, right? But the way we selling off, okay, are we gonna keep consolidating, or are we gonna make another higher low? That's what I'm looking at right here. That's what I'm looking at with this candle right here, right? And then I see, well, I don't have that candle on this one, I had it on the other one, but overnight we had sold down. Let me go back one. See, we had already sold down a little bit. We had already sold down a little bit lower than that right there. So that's another reason why, I'm in a bearish mind frame. So, you see my little liquidity trucks. Liquidity got picked up at the top. These my mental notes that I was telling y'all I be making. Liquidity got picked up. Liquidity got delivered down here. We raided these lows right here, those are in October, and then we came real close to almost taking out the ones that was back in July, right there. I mean, right over here. I don't have a what's the name, a line, but as you can see from there, if I scoot that over, that's real close to almost taking out these July lows. We almost matched them, but we totally rated the ones that we made in like September, October, right? And then I was looking over here and see that we was just consolidating. That's what the little green box is. These just be mental notes. I don't actually put these on my chart, but those I just want to share what my mental notes be, right? Those are my mental notes that I'm taking while I'm looking at the chart on the daily time frame in the morning, right? And so then once I have my mental notes, right, now boom, I'm on a 60-minute time frame, and now this whole area that we looking at right here, this whole area, as you notice, this green box around here, that's that green box that was right over there. We have zoomed in to this green box right here and dropped down to an hourly level. That's what we've done. We've dropped down to, and we just looking at that little area, that little green shaded consolidation area. That's the area that we've been consolidating inside. And so what I do, I mark prior to like prior to 8:30, I mark the most predominant swing high and swing low, the last one, the most predominant one, the one where I think for that day, where I think we're gonna go and dip into a liquidity pool and then form my setup that I'm looking for. So I marked this. You can see the swing high, swing low that I marked. I marked this one here with this line, right? This one was the most predominant one before 8:30, and this right here was the most predominant one before 8:30 at the time when this was at 6:58, right? At 6:58. Now, after it get closer to 8:30, if it be another swing high or swing low that form, depending on where it is, I may adjust. And I think on this one, on this day here, I ended up adjusting, right? So I marked the 60-minute. I marked my swing low and swing high, the most predominant swing low and swing high where I think it's gonna go dip into a liquidity pool and start looking for my entry setup. And as you see, I'm bearish on the day. And since I'm bearish on the day and looking at where we're trading right now at the time when I first log in, so I'm looking to take a sell off of this area right here. This is where I'm looking to take a sell off of, right? If we were to get above this and stay above it and keep selling back down and going back up and we never break down below it, then I'll switch and start, you know what I'm saying? I'll start playing for the other team and, you know, going long instead of trying to go short but right now, since I'm bearish, I'm looking for a reason to sell right here until the market show me otherwise, until it start breaking to the upside and never coming back, right? If I can't, if at 9:30, once it start, if it break down before then and it get below this one here, then I'm gonna be looking for a reason to go short off of this one. This is my secondary choice, but this is my first choice where I'm looking to take my entry. Long as it's trading in the middle of the road, I'm sitting on my hands. Why is that? Because we only trade what we see. We trade what we see, not what we think. You feel me? We trade what we see, not what we think, right? So then once I mark my swing low and swing high on my 60-minute chart, right, I drop down and I confirm it, right, or verify. I put verify on there. I verify it on the 15-minute, right? And as you can see from this 15-minute, I didn't have to change anything because it's the exact same swing low and swing high. It's in the exact same spot. So that's the most predominant swing low and swing high. So I don't have to change anything. So now I'm just waiting until market open, you know what I'm saying, to see if I need to adjust anything or anything like that. And for anybody that don't know what these other lines are, this white line right here, that's my line that marks the previous day close. That's the previous day close, so that I guess I should look this way. I should have put the slides up there, so I look this way, so it look like I'm looking at the slides. So that's the previous day close. That's what the white line is. This red line, this is the London open. And this yellow line, this is the 12 o'clock open, right? And you will notice a lot of time price action reacts to these levels. It reacts to yesterday's close. It reacts to London open. It reacts to the 12 o'clock open. And if you only watching the SPY or the I see somebody said the most predominant or the closest. Um, it depends, and the reason why I say it depends, um, I'm looking at the most predominant first, unless it's so like okay, this is the most predominant, and this is the most predominant, and we trading right here at this time, right? So let's just say the most predominant was up here, right? Let's say we made one and it was like right here where the matter of fact I ain't in the real thing. So where my mouse is, let's say that was the top of a swing high, right? And then but we was trading way down here, right? I wouldn't mark this one as my primary because it's so far above this one. The price got to show me that it really want to come way up here to sell all the way down. That's why I say I look for the most predominant first, unless it's like super duper high, right? So it's like you're gonna really have to know how the asset move on like what days it really consolidate, what days it on news days, how it trade, on OPEX weeks, OPEX day. That stuff you got to really learn that. It's like a feeling. It ain't no guarantees when it comes to trading at all. All of this is like a feeling, and it's based on because it's all probability. You taking the most you looking at the highest probability. So if you're dealing with the SPY or you're dealing with the ES whatever, and the most predominant high overnight was like a 20-point move, you know what I'm saying? How likely on this consolidation day is it going to run 20 points up and then run another 20 points to the downside? You see what I'm saying? It's all about the range of the asset. You know what I'm saying? You got to think about the range of the asset. What they call that? Average true ATR, average true range. Right? So boom, there we go. We okay, here we go. After 8:30. Oh yeah, the other line that was right over here, that's the 8:30 line. I learned that from ICT. That's an easy way for me to see just before the market start. Because if you notice, all of my lines, they end at 11 o'clock. Because 11:30 is really the latest that I'm really trying to just sit down and be looking at the charts. I ain't trying to be looking at the charts all day long. I'll come back in the afternoon, but most time I ain't trying to do nothing. You know what I'm saying? After that, that's why I got them stopping. And then the lunch hour kind of funny. But if y'all notice, I don't know if y'all noticed this, but like for like the last few weeks, the ES and all that right there, it's been making all the good moves during lunchtime. I don't know if y'all peeped that. But like around about 12:30, the ES been ripping. You feel me? They done got smart. They know everybody like, oh, ain't nobody looking at the lunchtime hour. We about to kill them. You know what I'm saying? That's how they been doing us lately. Right? So here we go. All right. Then it's after 8:30. So now it's after 8:30, and I'm verifying those highs. And if you notice, right, we made a new swing high right here, and it's right at. And then the reason why I didn't put another line on this right here, cause it's right at my prior day close. So now I just shift my focus to where I'm trying to take the entry. Like if I don't know if y'all can, is that clear? I don't know if that's clear or not. Let me blow it up some. It look a little fuzzy. Yeah, probably cause I had to blow it up on my slide, so it's fuzzy. It's a bearish for the day, looking for sell setup at this price. Do they say price point at this price point? I don't know. I can't even make it out cause it's real blurry. But that's where I'm looking for a sell setup at, and that's a most predominant swing high right? And that's still the most predominant swing low right there. So I just shift my focus to there. Why did I shift my focus? Because this was the most predominant swing high right here, and then we made another one right there at yet this was the most predominant swing high here, and then we made another one right here at yesterday's close. So now I'm not ignoring this, I'm keeping this here just so that I can remember what that level was in case we come back down and react off of that. But I'm watching, I want to get my entry based off of this one here. So I'm looking for it, instead of looking for it to go into the liquidity like here and swim around, I'm wanting to go up into the liquidity, you know what I'm saying, up here, like how it is up here. So now we splashing into the pool. I know it seems kind of weird to say splashing into the pool because you ain't jumping in, but I'm looking to go down. So I wanted to splash up into the liquidity and then come back down. You see what I'm saying? Splash up, come back down. If we was going up, I wanted to splash down, then go back up. That's why I call it the liquidity run reversal. We run the liquidity, then reverse. You see what I'm saying? That's why I call it that. That's the name I gave it. That ain't what ICT called it. He called it something else. Fair value gaps or something. I don't know what he called it. So I shift my focus, but I left the original line. All right, boom. Right, next slide, right? Now, I was watching it on the 15-minute until it make a convincing move in my area of interest. Okay, Tim, what you mean by that right there, right? Come back, Tim. Oh, Lord, you're seeing all the secrets. All right, so here we go. This the convincing move that it made. We swimming. We came up. We got into the liquidity pool. Splash. We splashed in. We swim around. Man, we wicked way up there. Wicked down. Getting kind of excited. We wicked up again. We wicked down. Getting kind of excited. You know what I'm saying? But it's just, it ain't nothing. It ain't nothing convincing and major. You feel me? But when we get up here, this is a 15-minute candle, and if you look at the time, let me see if I can blow it up, see if y'all can see that down there, right? I don't know if you can see that, but it says 11 seconds left on this candle, right? So this is a 15-minute candle that's about to close, right? This last one right here, this is a 15-minute candle that's about to close, and look how bearish that candle is, right? That's a convincing move to me. That's like, we ain't came to play. We ready to take this down. That's what the candle's saying to me. I'm like, antennas up. Now I'm gonna drop down to my 2-minute. Cause once I'm in the liquidity pool and it give me like a convincing move, it's time to drop down to the 2-minute and start looking for my setup. Right? We get into it. Just hang on. It say, where would you enter? We get into it, right? Boom. Here we go. Everybody say the setup rules with me. Everybody say the setup rules with me. Step by step, say it with me. Step by step, say it with me. The LRR steps, liquidity run reversal steps. What's the first step? Dip into the pool. What's the first step? Dip into the pool. What's the second step? Form swing high, swing low. What's the second step? Form swing high, swing low. What's the third step? Break, swing with aggressive move. What's the third step? Break, swing with aggressive move. What's the fourth step? Create a 3-candle fair value gap. What's the fourth step? Create a 3-candle fair value gap. That one up. That one messed me up. I was going good to that one up. Fourth step messed me up. Okay, and now the fifth step is you gonna predetermine your entry. You either gonna take it off the top, the bottom, or the middle of the fair value gap, right? The most guaranteed way to get in if you going short is just take it off the bottom of the gap and then front run it by 2 or 3 ticks, right? That's the easiest way to make sure you get in. That's going to increase your risk to reward if it want to, depending on how big the fair value gap is, depending on where the swing high you got to put your stop loss above is. But that's the easiest way to get picked up, right? If you going long, take it off the top of the gap, plus 3, front run it by 3 ticks. Again, that's going to increase your risk to reward depending on how big the gap is and how far the swing low is that you got to put your stop loss behind. So it's up to you how you want to take it, but you want to predetermine this because you taking it on options. And I'm going to show you in a minute why you want to predetermine this, because you're going to want to be ready to fire on the options, right? So now let's look at this right here. What happened, right? Step 1, right? Step 1, we dip into the liquidity pool. See this big arrow right here? This big arrow, that's the sploosh. That's a big move, dipping into the liquidity pool. Now we swimming in the pool. Swing low, swing high, swing low. This right here, you see this right here? This right here is a 3 candle move that broke that low right there, right? But Tim, so why you didn't take that one? You had a 3 candle move that broke a low and it made a fair value gap. Why you didn't pay that no attention? Because the reason why I ain't pay that no attention, because it wasn't no real aggressive move. These 2-minute candles, right? So it took 2, 4, 6 minutes for it to break this low. You see what I'm saying? So it was like, the candles look relatively big, but you got to think about it. We see this candle right here? That's an aggressive candle. You see how big that candle is? That's an aggressive candle, all within 2 minutes, right? But we started out and they fought back some. You know what I'm saying? Started out again, they fought. It was like some fights coming down here. You know what I'm saying? It was like a good down move, but it wasn't aggressive enough for my taste, right? And looking at it, it would have been, it would have been a good entry in hindsight, because if you would have entered right around here, that's the gap, front run it, you would have got picked up on this candle. This swing high right here would have made your booty pucker. You know what I'm saying? But you'll be all right because you stop high and right up here. In hindsight, you see that's actually a good trade, but it just wasn't the trade that I would have missed this trade, because you know what I'm saying, it wasn't aggressive enough for me. You know what I'm saying? This right here would have made your booty pucker, because you taking heat. If you entered here, you taking his heat. If you entered here, you still taking his heat. It's less heat than coming off the bottom of the gap. If you came off the top of the gap, you still taking heat, but you still safe because your stop loss is high and above this swing high. If I spit on my whack 'em one more time, I'm gonna choke myself. Yeah, you feel me? And then so we still swimming in the pool, because I ain't take that one. Swimming in the pool, swing low, swing high, swing low, swing high, swing low, swing high. Whoa, look at that move right there. Look at that move right there. That's a move, that's aggressive. Right there. When we came down, we had one candle where they pitter-patted. Then this candle broke this swing low by itself. That's aggressive. So now my attention comes to this swing high and this swing low. That's step 2 for me. If somebody would have took this trade back here, this would have been step 2 for them. This swing high and this swing low would have been step 2 if you took it off of this trade over here. This would have been step 2. This would have been step 2. Swing high, swing low. Just like, here we go. Swing high, swing low. Step 2, right? Step 3, break the move with aggression. Boom. This candle right here is the aggressive move that I'm looking for. If somebody took it back here, these 3 candles right here would have been the aggressive move that they looking for. But that wasn't aggressive enough for me. So this is the aggressive move that I'm looking for right here. Step number 4, the very next candle on the 3 candle pattern forms a fair value gap, right? I don't know if y'all can see that. Let me blow that up a little bit. Right there. You see, I don't know if you can, I got it kind of shaded there. It's kind of light. I don't know if you can tell I can't really see it on my tablet, but this green area right here, this is the fair value gap from there to there, because this candle 1. Yeah, that's right. This is candle 1. This is candle 2. This is candle 3. Candle 1 and candle 3 don't share a price. The low of candle 1 and the high of candle 3 in this instance don't share a price. If it was reversed, if we was going up, then it would be the high of candle 1 and the low of candle 3, because we would be going up. But since we're going down, the low of candle 1 and the high of candle 3 don't overlap at all, so they don't share a price. That space in between there is what's called the fair value gap, right? Okay. That's step number 4. What's step number 5? Step number 5 is you predetermine your entry. Do you want to take it at the top, bottom, or middle of the fair value gap? Right? We looking to go short. We looking to go short. So we looking to take it off the bottom. God dog it, come back. We looking to take it off the bottom of the fair value gap because I'm willing to take that risk of it coming to the top of the gap. That, you know what I'm saying, I'm willing to suck up that amount of risk. If you're not willing to suck up that amount of risk, you might want to split the gap. But I've learned, right? I've learned that a lot of times I be trying to split the gap and I end up missing it by 1 or 2 ticks because I'm trying to split the gap, right? I used to try to take it off the top of the gap, end up missing a lot of trades because it'll come either barely in the gap or to the middle of the gap. So I just started taking it off the bottom of the gap if the gap ain't like super big, because I'm gonna hide my stop above this swing high right here. Taking it off the gap, hiding the stop above this swing low. I mean, this swing high right here, right? So we predetermining, we coming off the bottom of the gap. Boom. Right? So that's all 5 steps. Y'all say the steps with me again. Right? We ain't gonna sing it this time. We just gonna say it. Liquidity run reversal steps. Step 1, dip into the liquidity pool. Step 2, form swing low and swing high. Step 3, break swing with aggressive move. Right? Step 4, create a fair value gap in a 3-candle pattern. Step 5, predetermine your entry. Are you entering on the top, bottom, or the middle of the fair value gap? Boom. There go all the steps. If step 1, 2, 3, and 4 not there, it's not the liquidity run reversal. Not saying that it's not a good trade. It may be an excellent trade. It may be like the melting butter trade, melting butter that I learned from Lex. It don't have every last one of these steps in it, but it's very similar. But I can see the difference between melting butter and liquidity run reversal. So just because every step of the liquidity run reversal not in there, don't mean it's not a good trade. It's just saying it's not this setup. It's not my setup. So if you got a different setup, figure out your setup on the ES to take your spot options. I'm just showing you my setup. All right. Boom. Now that we've identified that the setup is there, right? We've identified the setup is there. The whole time we watching this and looking for it, guess what we also doing? We looking at the SPY chart. Why are we looking at the SPY chart? Because we want to know the exact price the SPY is trading at when the setup sets up. You feel me? We want to know the price the SPY is trading at when the setup sets up. So if you notice, I marked the line right here, and the SPY, when the setup set up, the SPY was trading at 448.82, right? So at that time, I predetermined, right, my strike price. So if you want to trade at the money, I got 2 different ones. If you want to trade at the money, your strike price that you're looking to enter in on is $449. Whenever the SPY trades back to the spot where you want it to come back to at the bottom of the gap is 448.82, right? The bottom of the gap is 448.82. Right? That's the bottom of the gap right there. And this is the SPY. This is the SPY candles, SPY 1-minute candles. These are SPY 1-minute candles. And if you notice, right, we was looking at a 2-minute chart. So we had a big one. See this, these are 1 minute. So 1, 2. That's this big candle right here. These 2 candles here. That's this big 2-minute candle right here. That's 2. And then this candle right here. That's these 2 candles down. This green and this red. Right? So that's that candle. So the top of that candle is the top of this candle right here. So that's your fair value gap from this green candle to this red candle. That's your fair value gap right there that we marked off. The bottom of the gap is what? 448.82. So when it trades back to the fair value gap, that's where we're saying we're entering going short, right? See Tim Wait on that second one, I entered off the real aggressive candle gaps. I don't know. You gotta explain that to me, Lex. I'm gonna stop reading the chat. I ain't gonna look at the chat until I go through it for the people watching the replay because I don't want to be getting distracted. I'm gonna look at the chat after I finish, right? So this your fair value gap. So when you when it trades back, so now that the setup is formed, that's the most important part. That's the part you got to remember about this setup. Once the setup forms, you don't immediately jump in. Once the setup, is that Bernie? Is that baby? Is that Bernie? Keep hitting the door. I keep hearing something hit the door. Um, you don't just jump in when the setup forms. The way the setup works is it forms and then you wait for the market to trade away from it. If you going short, you want the market to trade down and then trade back up into it. It ain't got to run down forever. You want it to just trade down and then trade back up into it and then take it short. If you going long, once it's set up, you want it to keep going up and then come back down to the gap, and that's when you make your entry. That's one of the most important parts. That's why you want to predetermine your entry, because you want to know, you want to be sitting like a sniper. You sitting there waiting. You know exactly where you want price to come to. You looking like, yeah, come back to 448.82. Soon as you, okay, I see you, 448.84, 448.83, 440. Bye. Good night. Good night. Soon as it come back, you already know where you want it to come to, right? So you waiting for it to trade back into it. So now we see that, and if you're doing it at the money, your strike price is gonna be 449, right? On a intraday, I ain't trying to go 5% out the money. So I'm looking at 1% out the money at the max. You know what I'm saying? 0.5%, 1%, but I'm looking at 1% out the money at the max for an intraday, same day expiration trade. I ain't trying to go way out the money. You feel me? Right? So I'm looking at 1% out the money is $445, and at the money is $449, right? So once you predetermine that, because your setup is already set up, you looking at the thing, right? So once you predetermine your strike price, right, you watching the options chain, boom. You see when the setup first set up, right? When it first set up, if you look at the time, right, you see it say 11/11/22, right? And so that's around the same time when this candle right here, that's like the 11/12 candle. This is like the 11/12 candle right here. So around about 11/11, you see the 449 strike. This candle here was on the screen. Yeah, that's the 11/12 candle. And we looked at the time, 11/11/22. So that's around the same time. This candle about to close, right? So at this time when the setup formed, the at the money strike was $1.99 per contract. And the out the money strike 445 was 64 cents per contract. So now, because of theta, when it trades back to this position, to this level, depending on if it's 2 minutes, 4 minutes, 10 minutes, 15 minutes, the longer it is, the less it should be, unless they totally pumping the premium. You know what I'm saying? This how you can tell if they really pumping the premium on you, because if you got a same day expiration that you trying to get it, or even if you getting it for like 3 days out or a week out, if you scared to play the same day, it should be this price or lower. It shouldn't be higher than this, because theta is taken away at your position, especially on the same day expiration. The time ticking, and so it should be less than 199 and less than 64 cents per contract when it trades back to this. That's why you looking at it, so you know while you watching, you like, okay, this a good price, this a good price range when it start coming back, because you want to have your buy on the option side ready to go. You want to have that buy ready to go, right? And so boom, here we go. We go over there, and you see as when it traded down, right? We formed it here. We formed the gap here. It traded down, and now it's trading back into the gap. When it comes, I'm on the wrong screen. It traded down, and now it's trading back into the gap. Boom. So when it come down like this right here, this was the setup. This was the end of the setup. That was step 4 right here, right? We predetermined we get in there right here. So when at 4, so we looking at when it trades back to this spot, we already know we either gonna buy the 449 strike or the 445 strike when the ES price trades back to here, right? You're not even looking at the SPY chart right now. You know why? Because they move tick for tick. The SPY doing the same thing. The SPY traded down, then the SPY traded back up. Trust me, you ain't even got to worry about that. You just looking at your options chain because you getting ready to go in, right? So when it get here, now you salivating at the mouth. You know what I'm saying? You watching this option chain. And if you know what I'm saying, if you ready, you can go ahead and put in your order. Once you get here and start trading up, you go ahead and you can go in and speculate what you think it's gonna be. You know what I'm saying? You can go in and put in a price and see if you get picked up. You can just go ahead and put in for the mid price right now and get picked up. It's up to you. But I just wait until it get back to my point. Boom. Once it get to my point, boom, it hit that there. And as you see, I took a screenshot and I put in the price for at that time. If you look here, the 445. The bid. I just took the bid price on each. For the bid was going for 57 cents at that time, and on the 449, the bid was going for $1.84 per contract, right? And that's what I put in this area right here for our demonstration purposes on the spreadsheet that we gonna compare everything, right? So boom, now that we got picked up at these prices, now let's look at what the exit strategy is, because we already had this predetermined before we got in. And now let me show you how it looked on the chart, right? Before we even bought this position, we had already predetermined that our stop loss was going to be high and above this swing high right here. This was our stop loss, and our profit target, or our area we want to shave if we bought more than one contract. I'm just getting out. I'm gone. I ain't holding nothing because I don't know what the future holds. If I hit my profit target, I'm gone. I ain't leaving no runners. You feel me? Right? But if you the type that want to leave runners, right? Why am I picking this area right here? Why am I picking that? That's the bottom of the consolidation that we've been doing over them days. That's the reason why I'm picking that. And I'm thinking, if we selling down, that's going to be the first place we go to get some liquidity, right? We going to get the, somebody said, Doc, he said, don't say here. Don't say here, say the level. Don't say here, say the level. Shout out Jolene. But yeah, that's why I'm taking that, because that's the lows of that consolidation area. That's why that's my profit target. That's the place I'm looking from. Remember the chart way back? What was the chart? What was the slide? This slide way back here. Yep. This right here. That's where it is right there. Right? So I'm looking, if we start selling down, this the first place we're going to be going to dip in some liquidity, right? And down here, this is like a reach goal for like the whole week or the next week. Oh, golly, come on, Tim, get on the right screen. This right here is the first place that's going for some liquidity. And then down here, this is like a reach goal. That's a long-term reach goal for like a really bad week. The next 2 weeks just being horrible. You know what I'm saying? Going into March, OPEX just being bad. That's what I'm, you know what I'm saying? That I ain't even looking at that for today. I'm just looking at this swing low right here. That's why that's the exit that's the profit target for the day. That's why I picked that, right? Okay, so yeah, risk to reward. So that's the profit target, shave target, right? And then yeah, I said all that. All right, boom. So this how the trade played out. So it took, let me see how long it took for the trade to play out. 139.35. So we got picked up. What time was that we got picked up? Let me see what time that was we got picked up. We got picked up at 11:22, right? And then it hit our profit target at 139. It hit our profit target at 139. Right? So boom, at 139, Tim Rogers gone. I'm gone. If you and I got it so that if you shaved, I got the example if you shaved. So boom, it played out. It went in our favor. It never came back and stopped us out. I could see like maybe this candle right here. We probably came back and took a little heat on that candle right there because we got if you notice, yep, we did. We took a look. We might have took. I don't know. We might not have. We might not have took no heat because this was the entry candle on the bottom of the gap, and then so right around there we might have came back to break even, maybe 1 or 2 ticks of heat, maybe. I don't know, but and I'm saying ticks because it's futures, but you know what I'm saying we doing it on options, so I ain't gonna worry about the ticks of heat. We doing it on options, so let's move on. Stop thinking about futures, Tim. Okay, so boom, right? Exit and shave price. If you get out, boom, all your contracts gone right at the exit price, right? For the at the money strike, you got out at $5.54 per contract. For the out the money strike, you got at $2.57, right? If you left any runners for the rest of the day, right? This is your performance for the rest of the day. The runners that you left on, if you closed out at the end of the day, right? At the end of the day if you held all day, right? If you held all day, you got out with your contracts at $6.59 if you held all day, or if you left runners. So your runners, if you left runners, whatever you shaved was at $5.54, and whatever you left running, you sold at $6.59. And then on the other side, whatever you shave for $2.57, and whatever you left running for the rest of the day, you at $4.31. So if you held all day, this what you cashed out at. If you left runners, this what your runners cashed out at, right? And you see the performance. You see the performance throughout the day, how it went. It just kind of dilly-dallied side to side. You know what I'm saying? And this is at the end of the day right here. This right at 4 o'clock. You see 4 o'clock. You could trade up until 4:15, but I just stopped it at 4 o'clock, right? So this the end of day price right here, right? Well, the price at 4 o'clock. Because the end of the day price is at 4:15. If you go look it up on bar chart, you'll probably be like, Tim, you said this was the end of day price. The bar chart gonna give you the last price it traded for, and they take into account all of that, you know what I'm saying, that little extra time after. You feel me? Okay, so here is a comparison chart, right? This is a comparison thing that I did, right? So for the at the money, right, we got picked up at $1.84 per contract, right? We got picked up at $1. Oh, come on, Tim. Stop clicking that. We got picked up at $1.84 per contract, right? At our profit target, if we got out of that profit target, we made 201%, right? We made 201% for a profit total of $370, right? I mean your P&L. Yeah. Your profit total was $370 per contract, right? You made $370 profit per contract if you got out at your profit target, right? If you held to the end of day on the at the money, right? You had 258% profit on the day, you know what I'm saying? And you had $475 profit total, right? Per contract. $475 per contract, right? And so what I did with the out the money, since it was less money, I showed what it would be for one contract, right? And then I showed it investing roughly the same amount of capital. You know what I'm saying? So you would have been able to get 3 contracts for $171 instead of one contract for $184. So I just showed you the breakdown of investing the same amount of capital with the out the money, taking advantage of the out the money, as opposed to just doing one contract. Or if you only got the money for one contract, do the one contract. And you'll see that if you took your profit on the at the profit target, right? You got $200 per contract. So you see, if you bought 3 contracts and didn't leave no runners, you made $600 profit, right? If you did 3 contracts, if you did one contract and held it to the end of the day, you made 656% or $374 per contract, right? If you bought 3 contracts and didn't leave no runners and held it all day, you made 656% or $1,122, $1,122 in profit, right? If you bought 3 contracts and you shaved 2, you left 1 runner, you made $774 by the end of the day because you shaved 2 at the profit target, which gave you $400 profit, and then you sold your other one at the end, and the 374 plus the 400, that's your 774 on the day. That's just a little quick breakdown of, you know what I'm saying, just showing you the difference between using one contract, and I ain't feel like doing multiple contracts over everything. I just did it, you know what I'm saying, with the one, right? And then I did one other thing that I didn't include in the slides, and I'll show that real quick. I showed, I did one where, and I didn't include it in the slides, but I'll show you on the actual spreadsheet that I did. I did it where I compared if you, come on, Tim. Yeah, I did it where if you was able to like get out on the extreme high of the day. If you was lucky enough to sell on the high of the day, right? If you sold on the high of the day, so if you had one contract and on the at the money, if you lucky enough to hit the high of the day, you made 443%, which was $816 per contract, right? And if you was lucky enough to sell on the high of the day, on the out the money, you made 965% or $550 profit per contract, right? And if you had the runners where you didn't take no, you ain't hit no runners, but you sold it all at the high of the day, you made 965% or $1,650 for 3 contracts. And if you took a runner at your profit target, right? And then, which was $400, and left 1 runner, and you sold that runner at the high, which was $550, your P&L for the day was $950 if you was lucky enough to sell your runner at the high, right? So that's all I got on that, man. I just want to break it down to show how it's done with options. Because I know people be like, I don't trade futures. How do you do it with options? That's how you use the same ICT method for trading futures to trade the spot options. Now, does this work with anything outside of the spot or the SPX? I don't know, because I don't trade that. I know it worked with the SPY and the SPX because I trade the SPY and the SPX. The SPY and the SPX and the ES are all the same thing. They are the S&P 500. I know this model works with price action on futures, and since the ES are futures and the SPY and the SPX track tick for tick with the ES, I know it works. I see it works. I've shown it work plenty of times. And you know what I'm saying? For people who be like, oh, I'm doing hindsight and all that, I got I wish I would have sent this video to the computer so I could have showed y'all, but I don't know if y'all remember this. You already see what I be looking at. This right here, y'all probably, I don't know if y'all can see it, but this was a video I posted on Instagram, right? Let me get back to the beginning. Can y'all hear that? Trading today, you already see what I be looking at. This morning, ripped everybody face off to the downside, high. Broke that swing low with some authority, made a fair value gap. I'll be looking for that thing to come back here if I was trading today. I don't know. But I'm on my wealth walk. I'm gone. If y'all remember when I posted that, and that was before the move happened. And then the move happened. You feel me? Don't nobody in my family do hindsight. I ain't never seen Lex do hindsight. I ain't never seen Zay do hindsight. I ain't never seen Kiki do hindsight. I ain't never seen Briscoe do hindsight. Draco, I ain't never seen Draco do hindsight. I ain't never seen Fuego do hindsight. I ain't never seen Jay the Trader do hindsight. Ain't nobody in my family doing hindsight. We don't know it all. We just watch the charts and we take high probability trades. Do we trade at 100%? No, we don't. We take losses. And when we take losses, we put up the losses we take. I show you my losses. Lex show you her losses. Mark trading with a dummy, show you his losses. You know what I'm saying? Mark more so invests and but he still show you his losses on the investing side. And you know what I'm saying? A lot of times you have to cut and take losses on the investing side because the thesis broke. Yeah, it's true. If you hold it for long term and it's going to come back, you can't take a loss unless you sell when it's down. But if it's not going along with your thesis no more and the thesis is broke, take that L and put your capital into something where the thesis ain't broke. Anyway, man, y'all got some I know y'all couldn't see it, man. I just wanted y'all to hear it. I want y'all to hear it to know that it's real. You saw the squiggly lines. Oh, preacher game on Sunday. Okay, Tim, let me borrow that camera. I'll swing. Oh yeah, come on, swing by and pick it up. Kevo, appreciate that. I'm still waiting on my sick good shirt. I take them L's too. Yeah, them L's don't feel good. Man, all I have are losses. We all got oh yeah, appreciate the 500 subscribers too, man. I got to figure, I thought I could just start using the community tab, but I looked at it, it said I got to apply for something. Y'all already know what I said. Could we live back test one episode? We did that before. We live back test before. Go back and look at I can't remember the name of the video. I think it was called was it Backtest Live or Spy Trade Live or something? It's on YouTube. Well, the YouTube don't have names. If you look at the Instagram, they got names, and it's called we did that before. Let me see. It's got name. Let me see if I can look up the name for you real quick. Hey, why I'm not signed in? Why I ain't signed in, man? What's really happening? I'm supposed to be signed in on this computer. I don't like stuff like this right here, because if I'm just signed out for no reason, why am I signed out, man? I can't remember what my password is. Don't look like we finna look this up. Sorry about that. What's the well, any other questions? Let me see. If y'all see me on mid oh yeah. Can't trust anyone who don't share L's. That's facts. Is that a cut from Sun? Nah, this from a spot called. Hey baby, what's the name of that spot we went to, baby? Huh? What's the name of that spot we had went to?
What spot?
Where the cup came from.
Oh, it's a Mexican restaurant. It's a
Guadalajara. It's a Mexican restaurant. Guadalajara. It's fire too. My sweetie came in here, y'all.
Nobody have any questions though.
Yeah, y'all ain't got no questions. Oh, what's up, Craig? Man, shout out Craig Champion in the building. That's a good brother right there, man.
Hey, Craig.
Hey, Craig, how you feeling, man? How the family, man? I know, man. I was gonna say how the baby, but I know she grown now. Appreciate you for pulling up, man. Hey, just trying to share a little bit of information that I know.
Tell the missus I still be thinking about them raps.
Oh yeah, Clancy say she be thinking about them raps that Punny made. We know you ate before you came.
It's the Sonic Cup.
I be You came late? You came late, Jose? Oh yeah, it's gonna be it's gonna be on the YouTube page.
This is an everyday setup.
You probably can see it every day. It happens a lot. I ain't gonna say every day, but it happens a lot. It happens a lot. And you see it happen twice in one day. When I was going through the charts, it happened twice in one day. Like it was like, what was that, about like a 5-10 minute span?
Mike said he's sick good.
Sick
61
good.
likes, sick good.
From your experience, is it just better to take the short at the bottom of the gap and not Get a better. Yeah, from my experience, like I be getting left a lot trying to split the gap or take it off the top of the gap. But back testing and see how it work out for you. If the gap ain't super big, especially when you trading options, just go ahead and take it on the bottom of the gap. You know what I'm saying? Especially when you trading options. But if you're trading futures, you want to be more precise with your entries.
Lex say, if you see me taking a midday walk, that mean the market didn't tick me off.
Yeah. If you see them Crocs in the middle of the day,
no socks on.
and yeah, she is as tall as her shadow looks. That's what she said the other day. She was like, "Yes, I am as tall as my shadow looks." I appreciate you, the Lady Mill. I appreciate you for putting. I'm glad it's helpful.
Do you see this strategy on the daily for swings? Do you use this? Excuse me. Do you use this strategy on the daily for swings?
Now I don't use it on daily for swings. When I'm using it for swings, I want it to be like more on the extremes. Let me show you what I'm talking about when I say more on the extremes. Right? If I'm looking for my swing entries, let me get back. If I'm looking for my swing entries, God dog it, I done exited out the
So I see we going to North Carolina for vacation.
Let's see.
When you say come all the way to North Carolina, we get all the spring rolls we want.
Oh, you in Carolina? He in Carolina now? Oh yeah, we gotta pull up then. We gotta pull up then. I ain't know you was in. When you went to Carolina? I'm trying to.
What are you looking for, babe?
I'm trying to find. There it is. Your MacBook was in the way. And then God dog it. I came. It sent it to the other screen, and so it's. See, it was. I couldn't get back there because it sent it to this screen over here. Okay. All right. Now that I done found that, cred day in the morning. Okay. So looking at, let's go back to here, right here. Okay. So if we looking at the chart, right, and when I say the extremes, right, so we had like this a daily chart. We sold down. If you notice, we sold down, right? We sold back up. We made a swing high, right? We made a swing low here, right? We went up. I can show you better on the SPY because it looked cleaner on the SPY. Let me pull up the SPY chart because I already got it marked off. When I say I'm looking for it to be on the extremes, I don't want it to just be like so. See here on the SPY, right? So for my swings, these are daily candles, right? These are daily candles. So we sold down. We came here, right? We swimming in the liquidity pool. We went up, right? We shot up. Then we came back down here into this gap right here, right? So once we came into this gap, right? I didn't just jump in. You feel me? I didn't just jump in. Why? Because we came down, we made a swing high, we made a swing low, we broke it with authority, we made the fair value gap right there, and when we came back down to the gap, because of the way we had been trading, I said, I'm going to wait. The market ain't showed me nothing yet because we were still in no man's land. You see what I'm saying? And see, if I would have just jumped in here, now I would be down because I already knew we didn't have no catalyst to take us back to all-time highs. You see what I'm saying? So you got to think about it when it comes to your swings. When it comes to your swings, you're going to be in these positions for a longer amount of time. So you got to think about not only the technicals, but you got to think about the economic catalyst, right? So now that we trading down, right, I need a catalyst that I believe that's going to take us back to all-time highs. You see what I'm saying? I'm thinking, you know what I'm saying? Look, we could keep sliding. You know what I'm saying? We keep sliding. Yeah, it won't be no bad idea to, you know what I'm saying? If you just want to get in and get you a 2024 right now, ain't nothing wrong with getting a 2024 when it's down at the 200-day moving average. Ain't nothing wrong with that. You know what I'm saying? The little bit of heat that you might take on that ain't no big deal. You know what I'm saying? But I just want to take mine on the confirmation. I want to take mine on the confirmation going back up. I ain't got the confirmation yet that we just want to blast back off to all new highs. Cause we still got, you know what I'm saying? March OPEX and Quad Witch coming up. We still don't know the official rate hike. You know what I'm saying? Official start date, the official, you know what I'm saying, amount. They still playing with all of that. So it's a lot of stuff that's still going on. But I ain't looking for that setup every single day on swings. That's just you can use it every day for day trading, but when it comes to swings, you wanna, you wanna enter your swings with more than just a setup. You wanna enter your swing with like, you know what I'm saying, a percentage pullback, a exact price you want it to pull back to. You know what I'm saying? A EMA you want it to pull back to. You want to enter your swings on more than just one setup.
Champ say they back in Fayetteville where it all began.
Oh, Fayetteville. Oh, you back where it all started. Man, it's dangerous swinging anything overnight in options these days. Yeah, if you're doing the short term. If you're doing the short term, you can get busted in the head. All right, man. I done been on here for an hour and 20 minutes, man. I ain't gonna hold y'all up no more. I'm let everybody go ahead and get ready for their Super Bowl parties, man. I appreciate y'all for pulling up and spending some time with me. I'm just a dude from Fort Lauderdale, Florida. I don't really know nothing. I really don't even know why y'all on here right now, to tell you the truth. But hey, what I know, I'ma share it with you. Don't forget, trade what you see, man. I got options. IGO apparel coming soon. Whenever Lex drop Wealth Walk, I'ma drop IGO. I got options. I buy them, I sell them. Today I'm rocking trade what you see. Trade what you see, baby. Y'all stay safe out there. I'm getting ready to go. Y'all know what it is. Till the next time, I appreciate y'all, man. I'm gone.